So it looks like we are set up for potentially a decent little rally here. The problem is it a rally that is sustainable? Or is it a rally that's basically what we call a dead cat bounce or a bear market rally?
Yes. Welcome back, everybody, to Altcoin Daily. My name's Austin. The Bitcoin price is back. Well, actually, zooming in, after 9 straight weeks to the downside, it's just nice to see some life. Now, the 3 questions that I want to answer for you today is, what caused this pop? Is this sustainable? I.e., is this just a dead cat bounce? And the original downwards pressure that caused this, what was that downwards pressure again, and has this subsided? Check the timestamps down below. I will play you the full Chamath clip, his perspective on this market. But first off, why has the sell pressure for Bitcoin subsided? And what was some of that sell pressure to begin with? Well, obviously, the Luna Foundation Guard held a lot of Bitcoin in their reserves, and during the collapse, the Luna triggered sell-off in early May. A total of 80,081 BTC were liquidated by the Luna Foundation Guard. Interestingly, the volume of supply held by entities under 100 Bitcoin has since increased by 80,724 BTC. This shows a transfer from the Luna Foundation Guard to less than 100 BTC hodlers. So there was many people who bought when there was blood in the streets. Here is the chart. As you can see, the Luna sell-off started around here. Bitcoin's price went down. And there are 4 different lines. This blue line, green line, purple line you can see right here, and pink line after this sell-off just exploded. They went up. Those lines represent the entities with under 100 BTC. It's the light blue from 0.01 to 0.1, then 0.1 to 1, 1 to 10, and then 10 to 100. This is revealing. The dip is being bought up. This sell pressure is being alleviated. Now, of course, every buyer has a seller, but what this reflects is a change in ownership. New owners with new cost basis and a different strategy and approach. It's not the wallet that matters, but the conviction of the owner with the keys. And that's true, but let's even dig deeper. Chamath Palihapitiya, billionaire investor, owner of the Warriors, and bestie on the All In podcast, believes things have changed and conviction for all markets, at least in the short term, is getting better. And why is that? What's changed? Well, probably the biggest reason that we saw such suppression for Bitcoin, as well as all markets, is because of the Federal Reserve and their actions, i.e. raising interest rates. Interest rates bring gravity to markets. We've had a few different rate hikes thus far this year, with the current Fed funds rate between 0.75 and 1%. And while Chamath does believe that we might see 2 more in June and July, taking us up to around 2%, what the Fed is doing is working, i.e. tapering the inflation rate. And we can see what was once higher in March of this year and April of this year has started to turn. Listen to this about 2-minute clip of Chamath explaining why things may have changed for all markets, why we're seeing this pop, and is this sustainable, or is this just a dead cat bounce? Watch this.
We still had some amount of rate uncertainty from the Fed. I think people weren't sure how aggressively they were going to hike. But by early this week, it was pretty clear there's going to be 2 50-point hikes, one in June and one in July, and then effectively a pause, because then the Fed funds rate will be at around 2%. And everything from there will probably be path and data dependent. Okay, that's effectively what they said. Now, I think the markets had actually already started to see that writing on the wall. So if you go back to, one of our favorite measures, which is the 10-year break even, it's effectively rolled over, which means that from the highs in sort of late April, it started to come down, which says that, they were thinking that, the inflation was not going to be as bad in the back half of the year. And then the second is that corporate credit, which is really what matters in some ways to the Fed, because that's where they can intervene. What is the spread above treasuries that a company can issue debt? When it goes crazy and it goes up, it means, oh no, the cost of capital is going up. That's going to be hard for companies to raise money. They may have to lay people off. They may need to get into cost cutting mode, right? That's what goes through everybody's mind. But that's also now about 35 and 40 days rolled over, which means that the gap has started to shrink, between the US Treasury price and what, decent corporates can issue debt at. So it looks like we are set up for potentially a decent little rally here. The problem is it a rally that is sustainable? Or is it a rally that's basically what we call a dead cat bounce or a bear market rally, where, you just get some 1 or 2 weeks of relief before the thing spears down again? And we're not going to know, although tomorrow on Friday, there's going to be a really important set of inflation data that gets released. And I think everybody's going to be sweating these details. So right now we're in a moment of pause. And there is the potential, if this data comes back as reasonably good, which means prices are, not escalating as much as we thought, inflation is not going to be as bad, growth is going to be moderate, that gives a lot of ammo for the Fed to kind of take their foot off the gas here. And in that case, the markets will go boom.
Okay. Give me your thoughts on what Chamath just said down below. Let's all check the comment section together. But essentially, it's a waiting game. The inflation numbers we get back in these next 2 months will be vital to determine the Fed's actions in the later half of this year. And because we're still so much in a waiting game, I still think that whether these next few months we grind up, grind sideways, grind down, I still think we're going to see an increase of BTC dominance as people kind of cycle out of the more speculative vaults, consolidate into Bitcoin, maybe ETH. Again, give me your thoughts down below, but let's keep moving. In the final part of this video, there are still a few quality altcoins implementing crypto projects making news that you should know. So I encourage you to check the timestamps. But first up, what's happening with Ethereum in the upcoming merge? Ethereum's Ropsten test network ready for merge dress rehearsal. So the first testnet out of 3 is about to transition to ETH2. Ethereum core developer Tim Bako shared the news on Twitter last night. Ropsten merge announcement. Ethereum's longest-lived proof-of-work testnet is moving to proof-of-stake. A new beacon chain has been launched today, and the merge is expected around June 8th on the network. Node operators, this is the first dress rehearsal. So if this is successful on June 8th, after the Ropsten transition, 2 more testnets, Goerli and Sepolia, will be transitioned to proof-of-stake before the focus shifts to mainnet. The merge is coming, and the dress rehearsals are taking place now. Next huge piece of adoption news for Stellar Lumens. MoneyGram to open a transfer platform with Stellar on the Stellar blockchain, also eyeing a wallet deal in El Salvador. So MoneyGram International, one of the world's largest cross-border transfer services, is partnering with the Stellar blockchain to create a stablecoin-based platform for money transfers. The new service will allow Stellar wallet users to send Circle's USD coin, USDC, to recipients. And by the way, this is USDC on the Stellar blockchain, not ETH. But send that USDC to recipients who will be able to cash them out for fiat currency through the MoneyGram network. So if you like Stellar Lumens, you obviously like this. And the CEO also said that MoneyGram is in talks with third-party companies that will provide digital wallets in El Salvador alongside the government-backed Shiva wallets. So he's saying that they'll also provide the wallets, and they'll also have a transfer platform to make it easy to go in and out of fiat, in and out of crypto. I like it. Next piece of news for Polkadot. Polkadot's Moonbeam adds a liquid staking giant Lido. So just as a reminder, what is Moonbeam? Moonbeam is a connectivity layer between the Ethereum blockchain and services being built on Polkadot. So it provides interoperability between Ethereum, Polkadot, the 2 blockchains, and they're now working with Lido, a staking derivatives platform that allows Ether and other cryptos locked up in staking contracts to be used somewhere else. Another way to say this would be, Polkadot is bringing liquid staking to its network of blockchains, allowing cryptocurrency owners who pledged to support the proof-of-stake network, Polkadot, an avenue to increase their revenue streams by earning additional yield in DeFi applications. In a direct quote from the leadership of Lido, liquid staking is really a basic building block of the ecosystem. We are positioning Moonbeam as the best place to make multi-chain apps, as we believe there's a shift from people deploying apps on a single chain to deploying them to multiple chains, which is part why we chose to build on Polkadot. So good news for Moonbeam, good news for the DOT ecosystem. All right, that is the video. My name's Austin. Like always, see you tomorrow. And as a reminder, next week, June 7th and 8th in Austin, Texas, my brother and I will be speaking at Dcentral NFT Crypto Conference. And if you buy your ticket, use promo code Altcoin Daily 22 for a 30% discount. Link down below. Hope to see you there.